Everyone says you should ignore the daily headlines and invest for the long term. Yet every time the market drops, millions of people panic. Warren Buffett, on the other hand, seems almost immune to the noise. So here's my question. Why does Warren Buffett ignore market noise when so many investors can't? Let us hear from our guest, Dr. Evelyn Carter, behavioral finance professor and cognitive psychology researcher who specializes in investor decision-making, emotional discipline, and long-term wealth creation. She combines decades of research in behavioral finance with practical investing principles inspired by Warren Buffett.
That's because Buffett understands something most investors spend years trying to learn. The stock market isn't just a financial system, it's a psychological one. Imagine walking into a crowded theater where someone suddenly shouts, "Fire!" Even if there isn't one, your instinct is to move because everyone else is moving. The stock market works the same way. Fear spreads faster than facts. Most investors think they're reacting to information. In reality, they're reacting to emotion. Buffett once said that the stock market is designed to transfer money from the impatient to the patient. That's not just a clever quote, it's a lesson in human behavior. When prices fall, our brains interpret it as danger. Deep inside us, ancient survival instincts take over. Loss aversion makes losing 100,000 naira feel far more painful than gaining the same amount feels rewarding. That's why panic selling feels emotionally safe, even when it's financially destructive. Buffett trains himself to think differently. He doesn't ask, "What is everyone doing?" He asks, "Has the value of this business actually changed?" That's a completely different question. Think about your favorite supermarket. If your favorite product suddenly went on sale for 30% less, you'd probably buy more. Yet when great companies become cheaper during market declines, many investors run away instead of taking advantage of the discount. That's market psychology in action. Another reason Buffett ignores the noise is that he has an incredibly long time horizon. While many traders think in hours or days, Buffett thinks in years, sometimes decades. He isn't trying to predict next week's headlines. He's evaluating whether a business will continue creating value 10 or 20 years from now. This mindset protects him from what psychologists call availability bias. We naturally give more weight to the loudest, most recent news than to long-term evidence. Financial media knows this. Fear captures attention, urgency drives clicks. But constant exposure to alarming headlines creates the illusion that every market movement demands action. Buffett understands that activity isn't the same as progress. Some of the greatest fortunes in investing weren't built through constant buying and selling. They were built through patience, discipline, and the ability to stay calm while others became emotional. Think back to major market crashes. The investors who remained focused on business fundamentals instead of daily panic were often the ones who benefited most when markets recovered. That's why Buffett famously advises people to be fearful when others are greedy and greedy when others are fearful. He's not encouraging recklessness. He's reminding us that emotions often create opportunities. In the end, Buffett's greatest advantage isn't that he knows something nobody else knows. It's that he refuses to let fear make his decisions. And maybe that's the biggest investing lesson of all. Wealth is often built not by reacting faster than everyone else, but by thinking more clearly than everyone else.
What a powerful reminder. The market will always be noisy, but your mind doesn't have to be. If this conversation changed the way you think about investing, let us know in the comments. What's the biggest emotional investing mistake you've ever made? Don't forget to like, subscribe, and share this episode with someone who's serious about building long-term wealth. Until next time, keep learning, keep investing wisely, and remember, your greatest investment advantage may be your own mindset.